In the first 10 minutes of trade, the Aussie share market has fallen 1.4%, and that's because US stocks are diving in after-hours trade. The S&P 500 futures is now suggesting that that market will open 4% down when normal trade resumes. That is suggesting US stocks are bracing for a very negative open when normal trade resumes, and it seems that markets are set for carnage. A painful adjustment period is only just perhaps beginning. My name is Jessica Amir, a market strategist with Mumu. It's great to have your company this Thursday, April 3rd. So US stocks, they're falling like a knife after hours, and that's because US Donald Trump has unveiled brand new sweeping tariffs across the globe. We're showing the futures, they've gapped lower, suggesting a very bearish tone is underway for equities, perhaps maybe for some time. Significant after-hours moves in Apple. Apple is down 7% in after-hours trade. Nvidia down well over 4.5%. Amazon is down 6%. The Sea of Red is continuing to commodity markets as well. Copper and aluminium also down, suggesting Trump's Liberation Day is crushing every investor's spirit. The only certainty in town is uncertainty. And with that being said, the gold price has hit a brand new record all-time high. And my thesis looks like it's going to be continuing to play out, that will purely benefit gold. I guess if my other thesis does take effect, we might be expecting markets to be falling to the magnitude of a 10 or rather 24% drop in total. That could be on other investors' radars. So US President Donald Trump has unveiled new tariffs that will hurt most global companies, tech companies, Australian farmers and investors alike. But there's three key areas that I think that you need to watch that will cause significant heat. Now, the first one is beef. This morning, Australia was singled out. Donald Trump said, no more, just like that. And this is in relation to Australian beef. Of course, Australia's biggest export to the US is beef, and it seems like that copped a blow. Donald Trump is maybe going to put a ban on Australian imports of beef, but what we do know, we're starting to get some detail. It's looking like that may not be a ban. It could potentially just be a tariff. We await more detail, clarity, certainty on that. But last year, do consider that 4.2 billion Australian dollars was made from exporting beef to the US. That was after exporting 400,000 tons of beef to the US. Now, if Donald Trump does ban Australian beef imports, that'll hurt farmers and put a huge black hole on Australia's balance sheet. For investors, that really means that stocks like Australian Agricultural Co., which we are displaying on the screen, and Elders could come under huge pressure. Of course, both of these companies are making a big chunk of cash from beef. The second area that I think you need to consider seriously watching is big tech. So we're showing a chart of the NASDAQ 100. Now, please consider the 32% tariff on Taiwan will severely hurt NASDAQ 100 companies. We've been saying this for some time. Why? Well, big tech giants, vis-a-vis the NASDAQ 100 companies, they make on average 20, or their costs are 20 to 50% in some cases are pegged to Taiwan. So, of course, a tariff of 32% on Taiwan is going to hurt NASDAQ 100 companies. It's going to increase their costs, and it's going to cause their earnings to fall and, of course, their profits. And that's why we are probably going to be in for a painful adjustment period down. This could take time. No one knows how long this painful adjustment period could be. And what do I mean by a painful adjustment period? Well, banks, analysts, they need to adjust their earnings forecasts, downgrade those, and then the market needs to respond to that. And that's why I'm saying more dark days are ahead, clearly. The third key area that I think you need to watch is China. China tariffs have increased to 54%. This will also hurt big tech companies, squeeze their earnings down and their profits again. We know that companies such as the world's biggest companies, Apple and Nvidia, they make a lot of money from China. Please think about this. Apple makes 17%, that's 17% of their money from China. Nvidia makes 13% of their revenue from China. These numbers that I'm saying, they are as at Nvidia and Apple's last reported results. So obviously their revenue is going to cop a blow, their costs are going to rise, and their revenue from those regions is going to crush down. And that's another reason why you might be expecting more dark days for these companies ahead. Certainly, I'm not saying it's time to buy the dip. Expect more carnage ahead. I guess to repeat a quote from Mark Twain, he said that history never repeats itself, but it rhymes. And we heard the US Federal Reserve repeat that very recently in his most recent speech. But I guess why I'm saying this is history never repeats itself, it rhymes. I've been banging on about why you might expect US markets to crash 24%, because that's how much US markets fell by in the first trade war. The Aussie share market lost 15% from peak to trough. So all I'm saying is I think these scenarios could potentially rhyme. And that's why you really need to consider boring gold. It's just hit a brand new record all-time high. We're going to continue to see record all-time highs because uncertainty is the only certainty. Now, what about the Australian federal election? Well, Australia's response and to how they're going to potentially patch up that $4.2 billion black hole from beef exports, that could be lost. That'll be a key focus over the coming weeks. Stay safe, happy trading. Please do consider looking at gold and offering your portfolio some protection for downside.